All right, guys, welcome back to another episode of Everything Business, right? And today we're going to be talking about trial balance, right? So you're having trouble with trial balance, and you can't seem to understand, right? Let's fix that right now. All right. So please remember to like, subscribe, share the channel, right? Exam is coming up, and you want to do well in your exam, so you know you know what to do. All right. So let's talk about trial balance, right? What do we know about trial balance? So really and truly, what is the trial balance? So the trial balance is really uh, an account, right? A statement rather, that checks the ledgers. So the trial balance checks the ledgers, right? The trial balance tries, right, the balances of all the accounts that are in the ledger to ensure that there are no errors, right? And that's why you see it's called trial balance, right? Right? So if the trial balance is really not balanced, so if the debit side of the trial balance is not equal to the credit side of the trial balance, then you would know that there was an error somewhere. And if there's an error, then obviously you would have to go and search for that error. In some cases to find that error. All right. No, you may not find the error, but you know, you may not find the error all the time. And if you don't find the error all the time, then there's a way that we can treat with that. But that's not what this video is about. So let's look at some more core concepts. So with the trial balance, right? The accounts that carries a debit balance, they are normally placed on the debit side of the trial balance. And the accounts that carry a credit balance, right, are normally placed on the credit side of the trial balance. Sound pretty simple, don't it? Yeah, it's pretty simple. It's just like that, right? But then you may ask the question, which account normally carry debit balances and which account normally carry credit balances? All right. So in summary, the accounts that normally carry um, debit balances are, for example, all your asset accounts, right? All your asset accounts carries debit balances. So think about all the assets that you can have, right? All of them, whether current asset or fixed assets, all assets carries debit balances, with the odd exception of, let's say, the bank account, right? Because there are times when you may have a bank overdraft, right? And then even in that case, it's not an asset, it's now a liability if it's a bank overdraft, which means that you would have withdrawn more money than what you have in your account, right? But all assets, right, carries a debit balance. All expenses, right? All expense account. So whether it be rent, insurance, right? All expenses, purchases, right? That's an expense too, right? All of those things, all expenses carries debit balances. All right. Then no, accounts that usually have credit balances, right? Please pay attention to this part. So the capital account, right? You know the capital account already, right? All revenue accounts carry credit balances. So, for example, sales, right? Commission received, discount received, right? All of these carries credit balances. I was just talking about bank overdraft, right? So there it is. Bank overdraft carries a credit balance. All provisions account, right? And all provisions account carries a credit balances, right? And all liabilities account. So liabilities should be a part of this slide setup, right? So all liabilities account carries credit balances. So let me put liabilities there, right? All liabilities account carries a credit balance, right? So you have to remember that, all right? Okay. So then let's practice, right? So let's practice. All right, so here we have a question, right? It's a simple, well, not a simple, but a trial balance question, right? It's taken from a past paper, right? It's taken from a past paper. So yeah, so it's taken from a past paper. So if you look at it, it values 13 marks. What they have done here is they have given you a trial balance for heavy metal enterprises for the year ending the 31st of December 2011, right? They have inserted the amount for capital, right? They have also made some errors in this trial balance. And they're asking you to prepare a corrected trial balance. So you see now where it becomes important for you to know, right, what it is that you're expected to do or know what accounts are debited and what accounts are credited in the trial balance. So let us look at this now and let us try and correct this. All right. So that is what we're going to be doing now. So the first item there, right? Bank overdraft. What did we say about bank overdraft? It's a liability. And liability must be what? Credited. So this is on the wrong side. So we're going to move this, right? We're going to put it on the credit side. Right. Cash in hand. Cash in hand, you have to ask yourself now, is this an asset, liability, or those things, right? So cash in hand would be an asset. So it's on the right side, debit side. Provision for bad debt. Remember that we said that all provisions account carry a credit balance, right? So provision for bad debt would be on the credit side. So very good. Bad debt. What is bad debt? Bad debt is an expense to the business, right? So bad debt is an expense. It should not be on the credit side. If it's an expense, it should have a debit balance. So it should be on the debit side. So we have to move this one. So let's move the bad debt, put it on the debit side, right? Accounts receivable. Accounts receivable, right, is the same as debtors. So sometimes people may use the word debtors. So you can even put debtors in bracket there, right? You can put debtors in bracket there. So accounts receivable is the same as debtors, right? Debtors. Debtors would be a current asset, not true. So it should not be on the credit side here. So it is on the wrong side. So we have to move it now. Put it on the debit side. Very good. Accounts payable is the same as creditors, right? So you will see it sometime as creditors. And if you see creditors, you know that they're talking about accounts payable. Accounts payable or creditors is a liability to the business. So it should be on the credit side of the trial balance. And it is on the credit side. So that is good, right? A loan, whether long-term or short-term loan, is a liability to the business, right? And so it should be on the credit side and it's on the right side. Then we move to carriage inwards. Carriage inwards, this is an expense to the business, right? And all expense accounts carries debit balances. So if you look, they have it on the credit side here. It should not be on the credit side, right? So let's move it. Put it back on the debit side or put it on the debit side. Carriage outwards. Carriage outward is also an expense, right? Carriage inwards and outwards, is basically you paying money to carry your goods to your business, which is carriage inward, and carriage outward is when you are paying money to carry the goods, sorry, out to your customers. That is also an expense. You look at commission received. So let's say you sell some goods and you receive a percentage of what you sold. That is what we call commission received, right? So for commission received would be a revenue. What did we say about revenue again? All revenue account carry a credit balance. Yes, all revenue account carry a credit balance. And you realize that they have it on the debit side here, which should not be the case. So let's move it now. So we're moving it, putting it on that side. Then you have rent paid, right? And it's a good thing that they write rent paid because they could also write rent received. Rent paid is an expense, rent received is a revenue, right? So you treat them different. So this now, rent paid, rent paid is an expense. What did we say about expense account? Expense account, all expense account carries what? A debit balance, yeah. And they have it on the credit side here. So that is a problem. So we are going to fix that error. Yes. Then I have equipment at cost, which is an asset, obviously. Um, so you would have that there, right? On the debit side, accumulated depreciation. Depreciation is also an expense to the business, so it would carry a debit balance. Motor vehicle at cost is an asset to the business, same way, right? But they have it on the credit side, which is not, right? So we're going to put it back on the debit side. Accumulated depreciation for motor vehicle is an asset, right? And because it's an expense, so it should be on the debit side. Salaries is an expense to the business, so it should have a debit balance, right? And they have it here. Inventory, which is your stock, right? And this inventory, the fact that it is located inside the trial balance, right, is an indication, right, that it is your opening stock or your opening inventory, which is an asset, a current asset. So it should be on the debit side. Purchases is an expense to the business, right? And so purchases should carry a debit balance. So we're going to put it on the debit side. So they had it wrong there. So we're correcting that. All right. Then you have sales, which is a revenue. Sales is a revenue, and revenue, all revenue carries what? Credit balances. So it should be on the credit side. Yeah. So we change that around. And then you move to miscellaneous expense. Obviously, expense carry debit balance. Return outward, right? Now, return outward is what we would call a contra expense, right? You don't need to worry yourself about that terminology, but all you need to know is that for the return outward account, it is reducing your expense, the purchases expense. So return outward is also called purchases returns, right? And then return inwards would be called what? Sales returns, yeah, right? So the purchases returns are returns outward. It would reduce your purchases expense, right? And if when your purchases expense increase, you debit, then obviously when your purchases expense decrease, then you would credit. So the return outwards account would carry a credit balance. So you'd remove it from there because they have it on the debit side and put it on the credit side. And return inwards is the opposite of return outwards. Or sales return is the opposite of purchases returns. So you would have that there. Now, on the debit side. Now, obviously, this capital figure would be obviously incorrect, right? It's on the right side though, which is the credit side, right? However, we need to now recalculate all the figures. So you have to get your calculators out. So you get the calculators out, right? And let's add these figures. All right, so we're gonna add the debit side, or you can add the debit side first, right? Because we need to find or to recalculate the capital figure. All right, so let us look now at, I have my calculator here. So let us look at these figures now that we're going to be calculating. All right, so we're going to calculate the debit side, and you may be wondering, why am I calculating all of this, right? We need to find the corrected capital figure because that's what they said, showing clearly the corrected amount for capital. How do we find capital again based on the accounting equation? Capital equal assets minus liability. All right, so that is what we are going to be doing. On the debit side, you would find, basically your assets are for the most part your assets. So in this case, the capital figure would be equal to the difference between both sides, both debit and credit side. So that is what we are doing. We are finding the difference between the debit column and the credit column, and then that would have been, or that will be our capital figure. So let us start with adding up, right? So 3,200 plus 5,000 plus 49,100 plus 3,600 plus 4,500 plus 12,000 plus 90,000 plus 30,500 plus 68,000. And I want you to calculate with me now. So get your calculators out and calculate with me, right? 68,000 plus 15,400 plus 40,000 plus 16,800 plus 74,600 plus 36,400 plus 2,800. So that would give us 451,900. 451,900. So that is what we got, right, for the debit column. All right. So let's now calculate the credit side. So you go 26,500 plus 8,200 plus 54,200 plus 75,000 plus 6,200 plus 125,000 plus 3,600, right? We would not use the capital figure that's there because it is incorrect. So let's see, we get 298,700. So I'm going to jot this down somewhere. 298,700. So let's write that down. 298,700, right? 298,700. Obviously, they are not the same. So we want to find the capital figure. So we're going to find the difference. So we're going to subtract. So we go 451,900 minus 298,700. That would give us 153,200, which would be now our capital figure. 153,200, and that is our capital figure. Now, this figure would be equal to 451,900. And as you can see, it is as simple as that. And you would have gotten your 13 marks. All right. Let me know what you think in the comment section. Right. Let me know if you're having any challenges. And we can talk further. All right. But that's basically how you do a trial balance. Those are the concepts. And look out for my next video. The next video, I'll be looking at trading and profit and loss account, or income statement and the balance sheet, or they call the balance sheet now the statement of financial position. All right. Thank you so much. Remember to like, subscribe, and share. All right. See you in the next video.